Welcome to today's property investment analysis. We'll be exploring if this £8 million warehouse is a smart investment. As a chartered surveyor, these are the points that jump out at me. The property is a detached modern warehouse built across 2 bays and includes a loading yard and car park. Let's dive into the positives. The warehouse is located in South Yorkshire in the market town of Gainsborough. This is a slightly smaller market town, and the economic profile of the area will be of less strength. With that said, the building is in a commercial area and has good access back onto main roads. The property was purpose-built for the tenant in 2011 and appears to be in reasonable condition for its age. When compared with the buildings in the immediate area, it does present as one of the best units. It is also worth noting the tenant occupies an adjacent unit, demonstrating they are committed to the area. That is not to say they will not leave, but it is encouraging to know they have important operations nearby, which will mean they likely will save a good amount of money by remaining in the unit in the long term. The warehouse height is stated as 12 meters, which presents well even against new build units. This would certainly be a positive if you needed to market the unit for reletting. It is evidently taller than most neighboring buildings and would therefore likely let before those units and achieve a greater rent. From the internal pictures, if you ignore the tenant's fittings for a moment, the property seems to have a good amount of clear open space, which is what tenants look for when assessing industrial warehouses. They require the freedom to fit the buildings out to their bespoke processes, so a large clear box is often perfect for them. In terms of outdoor space, the property has a site cover ratio of 40%, meaning 40% of the site is covered by the building area. This is a fairly typical split and leaves space for on-site parking and loading. It is finally worth noting the building has a tank-fed sprinkler system, which some tenants require and often means the landlord can charge a higher rent. The level of office space also accounts for 5% of the total floor area, which is within normal levels for industrial buildings. The energy efficiency rating is B, which is a good positive and meets current minimum standards. The legal interest for sale is the freehold of the property and therefore represents the best type of holding available, albeit you still need to check the interest is free from any onerous conditions or covenants. As the plot is an independent property, it is likely to have clean title, save as for any historic covenants which might require title insurance. The investment is let to just one tenant, making the opportunity fairly low hassle. For the duration of the lease, you will need to inspect each year and ensure the tenant is not in breach of the lease. In addition to that, it is just a case of collecting the rent quarterly in advance. There is a good unexpired term left on the lease, with an expiry in September 2031, providing 7.28 years unexpired. A further plus is the lease provides for a fixed rental uplift to £6.45 per square foot in September 2026. This represents a guaranteed increased return in just over 2 years, without any of the hassle of negotiating a rent review with the tenant. The tenant business relates to food packaging. It is always prudent to speak to them during an inspection to understand how many contracts they have and who they supply. Their website reveals they work across many markets such as food, pet food, and medical packaging. Their clients include Weetabix, and they have facilities across the world. It can be seen from the brochure that the tenant company is fairly solid. The business is generating a healthy turnover and has a track record of being profitable. There is also a fairly good net worth reported. Where the real security comes from is actually the guarantor company, where the company has very good turnover levels, reported a profit of £15 million in 2022, and has a total net worth in the region of £65 million. I would have few concerns over the covenant. Now let's consider the risks. Returning to the location, Gainsborough is a remote small town in South Yorkshire with extended travel times via A roads back to other major locations and trunk routes. Therefore, there will be lower numbers of businesses seeking to locate here, and competing major markets such as Sheffield, Leeds and Nottingham will be preferred. One slight negative is the shape of the plot and the resulting impact this has had on building design. Due to the land being a thin rectangle, the loading yard has been placed at the gable end. This limits yard loading space and limits the number of loading doors the building can accommodate. The best units have loading from the side elevations, where the number of doors and therefore internal goods circulation can be maximized. With that said, the loading yard has a depth of 65 meters, which exceeds what units typically comprise. As hinted to above, this unit only has 2 level access loading doors for deliveries, partly because of the reasons mentioned above. A unit of this size would usually be expected to have in the region of 8 doors. There is space along the elevation to improve loading, perhaps with an additional 2 doors. It may also be worth considering creating dock-level doors, which are most suitable to loading heavy goods vehicles such as lorries. It is clear from the photographs that the building has depreciated over the years. The cladding panels look tired, and no doubt the office accommodation will be in need of a refurbishment. If the tenant were to leave, the building would require capital expenditure in order to re-let at a high rent. This should be factored into your risk analysis. In terms of leasing risk, the brochure unfortunately does not confirm the tenant's repairing liability. One thing that would need to be checked is that the tenant is responsible for repairs and insurance for the building, and that there is no schedule of condition attached to the lease, which would somewhat limit the tenant's liability. This typically impacts the lease end process, as the norm for commercial buildings is to recover the costs of returning the building to a lettable condition from the tenant. As a final drawback, there is the risk that the fixed uplift in 2 years will not represent a full market rent, and if you could achieve more on the open market, the tenant will enjoy the profit of the lower rent for 5 years, and this a portion of the landlord's return that cannot be realized for quite some time. Your capital investment return will essentially be capped and could track below other opportunities in the market. In conclusion, this property represents a fairly good hands-off investment. The rent will increase in 2 years, and this is a predetermined fixed process, removing the need for any rent review negotiations. The unexpired term is fairly long, and this means you don't have to worry about any reletting plans for quite some time. Indeed, you could take the rent for 3-5 years and then sell the unit if the letting process is not something you want to concern yourself with. With an asking price of £7.7 million, which reflects a net initial yield of 6.00% and then a yield of 6.75% at the September 2026 review, I would anticipate this to sell below asking price, as investors will require a slightly higher return for a property in this location, and the risk around the fixed review limiting returns. Let us know in the comments what you think. Thank you for joining us in this property investment analysis. Get in touch with suggestions for future videos, and links to the investment are in the description. For more insights and detailed property evaluations, don't forget to subscribe and hit the bell icon for notifications. This has been the Secret Surveyor, unlocking property investment secrets.